UAE Corporate Tax Implementation. Part 2. Purpose, Objective. UAE joined the inclusive BEPS framework on the 16th of May 2018 and has become 116th jurisdiction to get committed to work jointly with all the countries who are part of the framework. As a result, the European Union, EU, removed the UAE from a blacklist of countries that were not considered to be cooperating sufficiently in progressing international anti-BEPS initiatives. This will help to strengthen the UAE's business and investment reputation in the Middle East. Inclusive framework requires members' commitment to implement the 4 anti-BEPS minimum standards with exchange of relevant information for peer review and monitoring to tackle tax avoidance, improve coherence of international tax rules and ensure a more transparent tax environment. What has UAE done about BEPS? Implemented Economic Substance Rules, ESR, BEPS Action 5. Signed the Multilateral Instrument, BEPS Action 6 and 15. Introduced Country by Country, CBC, Reporting, BEPS Action 13. Implemented a Mutual Agreement Procedure, BEPS Action 14. And implemented the Common Reporting Standard, CRS, to allow the automatic exchange of information and ultimate beneficial ownership, UBO, rules. Corporate Income Tax. Counter harmful tax practices more effectively, taking into account transparency and substance. In some countries, having tax structures designed to attract investments, being no tax or nominal, low tax regimes, which is beneficial to the country receiving the investment but harmful for other jurisdiction losing the attraction due to higher tax rates. This action report is one of 4 BEPS minimum standards which all members have committed to implement and to participate in its peer review. Its main purpose to provide level playing field to all jurisdictions. This action process includes the assessment of preferential tax regimes to identify features of such regimes that can facilitate base erosion and profit shifting, and therefore have the potential to unfairly impact the tax base of other jurisdictions. This global standard means that mobile business income cannot be parked in a zero tax jurisdiction without the core business functions having been undertaken by the same business entity, or in the same location. In doing so, the inclusive framework will ensure that substantial activities must be performed in respect of the same types of mobile business activities, regardless of whether they take place in a preferential regime or in a no or only nominal tax jurisdiction. The 12 no or only nominal tax jurisdictions, Anguilla, Bahamas, Bahrain, Barbados, Bermuda, British Virgin Islands, Cayman Islands, Guernsey, Isle of Man, Jersey, Turks and Caicos Islands, United Arab Emirates, have been exchanging information under the NTJ standard since 2021. The exchanges not only provide key data on the substance and activities of entities in no or only nominal tax jurisdictions to the jurisdictions in which the immediate and ultimate parent and the beneficial owners of the entities are resident, but also enable receiving tax administrations to carry out risk assessments and to apply their controlled foreign company, transfer pricing and other anti-base erosion and profit shifting provisions. Prevention of tax treaty abuse. This action report is also one of 4 BEPS minimum standards which all members have committed to implement and to participate in its peer review. Bilateral tax treaties between different jurisdictions have served to prevent harmful double taxation and remove obstacles to cross-border trade in goods and services, and movements of capital, technology and persons. This extensive network of tax treaties has, however, also given rise to treaty abuse and so-called treaty shopping arrangements. Treaty shopping typically involves the attempt by a jurisdiction to indirectly access the benefits of a tax treaty between 2 jurisdictions, B and C, without being a resident of one of those jurisdictions, B and C, where these benefits were not intended to be granted, thereby depriving jurisdictions, B and C, of tax revenues. For example, in above image, a company A allows its intellectual property rights to company C to earn royalties. Company A jurisdiction does not have a tax treaty with jurisdiction of Company C. So the withholding tax would be deducted while payment to Company A. But both Companies A and C have tax treaty with Company B jurisdiction. So Company A can create a shell entity as Company B. So the Company B will receive royalties without withholding tax and will pay to Company A without withholding tax on payments. The minimum standard on treaty shopping requires jurisdictions to include two components in their tax agreements: an express statement on non-taxation, generally in the preamble, and one of three methods of addressing treaty shopping. Permanent establishment status. This action report is to address strategies used by foreign enterprises to avoid having a taxable presence in a jurisdiction under tax treaties. Tax treaties generally provide that the business profits of a foreign enterprise, for example a company outside UAE earning profits from operations in UAE, are taxable in UAE jurisdiction only to the extent that the foreign enterprise has a permanent establishment in UAE to which the profits are attributable. Therefore, definition of permanent establishment included in tax treaties is crucial in determining whether a non-resident enterprise must pay income tax in another jurisdiction, in this case it's UAE, otherwise cross-border income to go untaxed or be taxed at low rates. So, if a PE status is established and all necessary conditions are met as having a fixed or permanent place in UAE, then the profits earned shall be available for UAE tax under the tax treaty agreement between the jurisdictions. UAE Corporate Tax Law 47. Article 14, Permanent Establishment. It requires for a non-resident person to verify one of two following instances to confirm that if the non-resident person has a PE in UAE or no. Where it has a fixed or permanent place in UAE through which its business or any part thereof is conducted. For example, a place of management, a branch, an office, a factory, a workshop, land, buildings and other real property, an installation or structure for the exploration of renewable or non-renewable natural resources, a mine, an oil or gas well, a quarry or any other place of extraction of natural resources, including vessels and structures used for the extraction of such resources, a building site, a construction project, or place of assembly or installation, are supervisory activities in connection therewith, but only if such site, project or activities, whether separately or together with other sites, projects or activities, last more than 6 months, including connected activities that are conducted at the site or project by one or more related parties of the non-resident person. Where a person has and habitually exercises an authority to conduct a business or business activity in the state on behalf of the non-resident person. Any of the following conditions apply. The person habitually concludes contracts on behalf of the non-resident person. Contracts concluded by non-resident person without major modifications which were habitually negotiated by the person on behalf of the non-resident person. But if the person act as independent agent to non-resident person in the course of his business activity and does not act exclusively on behalf of the non-resident person being legally or economically independent of non-resident person, then PE status shall not apply. Clause 3 of the article says regardless of one and two conditions above being true, a fixed or permanent place in the UAE shall not be considered a permanent establishment of a non-resident person if it is used solely for any of the following purposes: storing, displaying or delivering of goods or merchandise belonging to foreign enterprise, keeping a stock of goods or merchandise belonging to that foreign enterprise for the sole purpose of processing by another person, purchasing goods or merchandise or collecting information for the foreign enterprise, conducting in combination all above, a, t, c, or any other activity provided that such activity or combination having a preparatory or auxiliary nature for the foreign enterprise. The above clause 3 shall not apply and a non-resident person shall constitute a PE status. If the foreign enterprise, non-resident person or its related entity has same or other place that constitutes PE in UAE, The overall activity resulting from the combination of the activities carried out by the non-resident person and its related party at the same place or at the two places is not of a preparatory or auxiliary nature and together would form a cohesive business operation, had the activities not been fragmented. For the purposes of Clause 3 of Article 14, the minister may prescribe the conditions under which the mere presence of a natural person in the state does not create a permanent establishment for a non-resident person in any of the following instances. A. Where such presence is a consequence of a temporary and exceptional situation. B. Where the natural person is employed by the non-resident person, and all of the following conditions are met. 1. The activities being conducted in the state by the natural person are not part of the core income-generating activities of the non-resident person or its related parties. 2. The non-resident person does not derive state-sourced income.